All right, as Bay Street gets back to business, on Wall Street, they were very busy yesterday talking about a big development in the world of U.S. debt. Moody's, a major credit player, late last week stripped the U.S. of its top credit rating. And I want to bring back Earl Davis, head of fixed income and money markets with BMO Global Asset Management, to talk a little bit more about that story and what's happening with the U.S. economy. And it was funny, the headline was that traders on Wall Street looked past the downgrade. But at the end of the day, you have a massive amount of U.S. debt, massive amount of interest payments that add to that debt, a lot of political squabbling over the fiscal picture. And this seemed to be Moody's slapping the wrist of politicians over that squabbling. So for a day, Wall Street kind of pushed the story to the side. But what was your reaction to this decision overall?
So let's talk about ratings. So what is a rating? It's basically a company saying this is the chance that the U.S. Government will default on their bonds. Yeah. So it went from AAA to AA. That means as an investor, you want a higher interest rate. So the interest ends up going higher in general on their debt, which ends up being more bonds have to be issued. When you look at the U.S. debt right now, interest rate is the second highest expense out of anything. So now it goes even higher. So more debt in general. Downgrade in ratings is not good for your interest rate, more debt. So then why didn't the stock market reacted? You know what? Moody's is late to the game. S&P downgraded from U.S. from AAA to AA. You know when? 2011. Fitch downgraded U.S. from AAA to AA, 2023. Now we got the last one. People are basically saying this is just one more company downgraded. We already discounted this. Having said that, I think there's significant implications here for Canada. This year, there's two countries that got downgraded, France and now U.S. By Moody's. Why is this significant for Canada? We've been told 5 years ago by the rating agencies, you're AAA and you're stable, which is good, but we're looking at what you're doing revenues versus expenses and what's your deficit looking like. I actually think personally this is one of the reasons you heard the change in the government of Canada in regards to having a budget this year.
Yeah, Mark Carney was asked about that. Actually, last week we were talking to Ontario's finance minister because they put out their budget, and I literally asked him, what do you think of the fact that the federal government doesn't have a plan to do it this year? And sure enough, within a couple of days, Carney said we're going to try to do it later this year.
I also think it's not a coincidence with the Moody's downgrade, because that's a shot across the bow of Canada. We don't want a downgrade. We already have a lot of debt. We're AAA. We're very good. And not having a budget this year gives a little bit more uncertainty to the markets and rating agencies. That's why I think we will have it, and we'll start to maintain it. The good thing with Canada is our rating is stable. Before downgraded, they move it to negative, but we're still very good here.
So I guess to tie it back to the markets, I mean, the common things that people might point to as, what could happen when you see downgrades, less confidence, can impact the currency, can boost volatility, and as you already pointed out, it can raise borrowing costs. So there's a lot of moving parts. So what will you be watching closely to determine not only if Canada can navigate the credit rating agencies, but in the U.S., how they respond to this Moody's action, even if Moody's is late to the party?
I actually don't think they will respond because now everyone is AA on the U.S. So I think it's going to be business as usual for the U.S. Also, their reserve currency, so the typical impact of a weaker currency on a downgrade won't necessarily happen with the U.S. because everyone still needs it for trading gold, oil as a reserve currency and doing what they do. So I think it's going to be muted for them. But as I said before, there could be implications here for other countries. So everyone has to be careful.
All right, Earl, good to see you. Thanks as always for some great perspective and insight. Earl Davis joining us here in studio.